Well, good day, everybody. Chris Herline here of REAP Financial coming to you with today's Wealth Report. It is September 20th, 2024, and I'm excited to have you join me. I'm going to cover a few client questions today, but I've got to tell you, I'm really excited about the topic I'm going to share with you. This is something that I've never really formally spoke on, but due to a lot of response, a lot of questions around this space, we're going to talk about it today. And if you haven't been at least thinking or researching or maybe even critiquing Bitcoin, well, then maybe you want to start doing a little research. I want to thank you for joining me today because we're going to take a deep dive into what for many of you may be maybe the unknown. And when you think about Bitcoin, you may ask yourself, where did it come from? What is it? And I just think it's really important that we discuss it because in the last 12 months, it's hit all the media, it's hit all the financial industry in a new way. Before I dive into this, I want to be sure too that you understand that this is general in nature today. We're not making any recommendations on Bitcoin. This is purely educational and it's going to be very educational. I, for one, have been really shocked at the lack of conversation that goes on in the space of cryptocurrency, really over the past, 5-7 years. When you look back, it's kind of been this unknown or this kind of boutique type of asset that not many people knew what to do with. And back in 2015, you rewind, that was, nearly 9 years ago, I went on this full-blown PhD mode, research mode, zone, whatever you want to call it. And you could ask my wife, that's how I do things. I just put my student hat on and I learn. I swim in it. And through the journey over the last 5-7 years, what I've seen happen has just been mind-blowing in this cryptocurrency space. But here's a little secret. I believe, personal opinion, that it's not even really getting started yet. Back in 2015, this is how I was introduced to the cryptocurrency space. One of my clients said, hey, I've got a son that's trying to talk me into buying $1,000 worth of Bitcoin. And I looked at her and I said, can you tell me what a Bitcoin is? And her answer was, of course, no. I said, why don't you have your son call me? I'd love to just pick his brain. He was a very smart kid. He graduated MIT. And he had been in this space for many years, just putting $200 away out of his paycheck. He was a young guy. I think back then he was like 24 at the time. And just hearing his belief in it, hearing somebody very young getting in the game with a very small amount of money, it just intrigued me. And so I started doing further research and looking in to see if this potentially could be a future investment trend. And now even back then, you could hear somebody in a chat room or a message board saying that Bitcoin could be the next gold. And the more I've learned about money over the years, the more I started to zoom out and I realized that there's a real flaw with the dollar. Like some of you would agree, we all charge up the dollar with the value that we put into it with the trading in our economy. And so the dollar represents really the value that we put into it. But I think you could agree that it's leaking out a lot of value, particularly since COVID. And something else I realized through my research is the dollar is actually, well, as it is today, it's a radical experiment that could potentially fail. That if you just do a little bit of research, economic research, you would learn that there's a 100% failure rate with this type of system. It's called fiat money, right? And the first money system that was put in place was over 1,000 years ago in China. It was a currency called the Zowie, something like that, the Zowie. And every time they tried, it's failed. And they tried it right here in the United States back in 1971. So here we are. We put our heads down, right? We work for money, we get it, we spend it, and we don't really think about what it is and what's the overall trend with the dollar. And I started realizing that one day, just maybe, we could wake up and the dollar could be no more. And that may sound really crazy, But through reading books, my research, I was realizing that you could see something like this happen. And when you believe something like this initially, everyone in your circle could think you're crazy. You can get made fun of or whatever. You could also turn out to be right. And you can make a lot of money when you're right. And you can build generational wealth by being right when everybody else is wrong. And so in 2016, that's when I bought my first Bitcoin. And I remember hearing about Bitcoin, just rumbles of it, even before that in 2013, 2014, very early on. And I remember saying to myself, that'll never work. The government's going to crush it. I mean, how are we going to have a digital currency? Questions like who created Bitcoin? Some mystery character out there. And I had all these objections. I had all of these limiting beliefs, the dismissals of Bitcoin. And so I dismissed it for several years. But in 2015, after speaking with my client's son, it caused me to go back and take a deeper look at Bitcoin. And when I went back and looked, I realized that there's something special going on here. And maybe it won't go away. We'll see. And if it doesn't go away, could it become one of the biggest economic trends of our lives? And I think right now we're only maybe in the third chapter, let's say, of what's shaping up to be something pretty amazing. Over the past few months, we've seen Bitcoin with massive rallies. And that's why we're talking about it right now. That's why my team of advisors, we're getting a lot of questions about it. Bitcoin has risen to over 70,000 per coin right here in 2024. And just before that, we had all these major institutions, all of a sudden, they're starting to invest in Bitcoin. The SEC approved a Bitcoin ETF, actually over 7 Bitcoin ETFs at the beginning of 2024. And I remember back in just 2021, the last rally, and we didn't see a whole lot of that. So some of the questions that have come in, I figured I would read over them. Here's a question. Dear Chris, should we expect a massive correction with Bitcoin? And if so, what does that mean in the context of the legitimacy or acceptance of Bitcoin? That's a really good question. And I think the first thing, let's take a look at this chart right here to set up a proper answer to that really good question. So this is as far back as Bitcoin performance data goes. So look at this. Immediately, one word probably comes to mind. I'm going to give you a hint. My kids love playing with these outside. Bubbles. When you look at this right here, it looks like a giant bubble, right? But if you zoom out a little bit, the data starts all the way back here early on. And for a really long time, Bitcoin's not doing anything, and then it explodes up right here. And then it crashes almost all the way back down. And then right now, it's exploding up. And it really just looks like a bubble. And in my opinion, this is actually a problem with the charting view because Bitcoin is doing something so amazing that you really can't use regular charts to even get a look at what it's doing because in this scenario, the percentage moves at different points in time. But take a look at this. If I zoom in just a little bit, I mean, how can this even be the same asset? This is a bubble, and when you look at it this way, it has volatility. But it's steadily just climbing right up. And the first thing I would say is if we want to make sense of the price movements, we need to zoom out fully to get the whole picture, all the way back to 2011. Second, we need to look at the log chart. What do you see here? There's a lot of volatility. If we want to measure some things, if we want to zoom in here, we can measure this. These are weekly candles. That's what I'm showing you. And we can measure from the new high that was achieved just a couple weeks ago down to the correction, could be a 20% correction in the last couple weeks. And this is why it's so important to look at the whole picture, because that little correction is nothing in the long history of Bitcoin. And if you don't know how volatile it could be, just look at this. Back in 2013 to 2015, it lost 85%. And then up here, it lost 82%. And I would say that the numbers, one thing that matters when seeing the forest and the trees here is to understand that it doesn't really matter how many points you put on the board in any quarter, in any inning or whatever. It's the score at the end of the game that really matters. So we want to think long-term when you're looking at an asset like Bitcoin. And you can lose a lot of points on the board, and you can have an 80% drawdown, but just to put the number into perspective, this is an asset class that has grown by over 1.7 billion percent. You want me to say that again? It's grown by over 1.7 billion percent since 2009. That's an incredible stat. To give you some context, over the last 10 years, the S&P has grown by 327%. Bitcoin has increased by 12,300%. So the only way that anyone has figured out to lose money with Bitcoin in the last decade or so is by holding it less than a multi-year time period, or by maybe even not properly securing it. I'll talk about that today. There's a lot of people out there that have lost their Bitcoin. Anyone that handles the security of their Bitcoin and has a long-term time horizon, those people are in the green right now. Many are in the green big time. In the green to the tune of some cases turning thousands of dollars into well over $100 million. And if any asset class that we invest in were as small as Bitcoin, you would have as much, if not more, volatility. Now, when you compare Bitcoin to other asset classes, Bitcoin's a $1 trillion asset class. That may sound big, but I'm telling you, it's only $1 trillion. It's important to point out that Bitcoin accounts for 60% of all of the cryptocurrencies out there. Now, you compare that with stocks that are approaching somewhere around $111 trillion globally. 1 trillion Bitcoin. We look at stocks, 111 trillion globally. Real estate's around 380 trillion globally. Gold is around 16 trillion globally. Silver is at 1.5 trillion. So it's even more than Bitcoin. So think about that. This is a $1 trillion asset class. So anytime somebody puts millions of dollars in or out of Bitcoin, it moves the crypto market quite a bit. There's so fewer traders at this time than compared to real estate and stocks. So number one rule, in my view, is study the chart. Think long term. It's funny, as I watched Bitcoin from the sidelines early on as a spectator, there was countless startups, especially like in 2016 and 2017. A lot of initial coin offerings, new concepts popping up. And it pushed that rally that we saw in that 2017 timeframe. But there also came a correction, and a whole bunch of destruction and blood in the streets came out of that correction. It came to all the alternative cryptos along with Bitcoin. I mean, people were hacking Twitter accounts so they could promote Bitcoin. We all remember those kinds of stories back in 2017. When you see Bitcoin rallies, it comes with a lot of FOMO, fear of missing out. And even still, the space is fuzzy. But it's becoming clearer and clearer that this is an asset that likely is never going to go away. Let's take another question. Chris, did the dry spell that we saw in 2022, a correction I assume is what they mean, did that help purge the bad actors, the bad coin offerings out of the space? Or do you think that the public mentality is still the same? Well, as I mentioned, a lot of people got burnt in 2017. A lot of people lost money in 2022 if they sold in the correction. And they bought in at the middle or at the top, and then there was that over an 80% correction, and things went dormant for a little bit. And a lot of people said, this is it. Bitcoin's never going to last. It was fun while it lasted. That's the type of jargon we heard. And there was definitely a lot of purging. And that was good because a lot of the initial coin offerings outside of Bitcoin, alternative, they call them altcoins, a lot of those were scams. There was a lot of fraud in the space, but there's also so much innovation in this space. If you rewind to the 1990s, if we were working together, if you were a client of Reap, I wouldn't be communicating with you through our bi-weekly wealth reports that I send out. You couldn't grab an Uber. You couldn't just watch a video online. Most of us may have been starting to dabble in the internet in the late 90s, may have just started using email, but it was really about it, right? But back in the 90s, and you have to remember when the internet came out, it was a total mess, right? You remember that? It was basically early on associated with scams. And there was a period of time that if you put your credit card on the internet or into the internet, you were probably going to be scammed. You were probably doing something maybe you shouldn't. So people would say if you're getting your credit card out, if you're on a computer, you better stop. Stop what you're doing. I mean, people would say you're crazy. You can't put your credit card online. Well, what was going on is the internet hadn't matured yet. It needed people trying to build things. It needed people to fail so that they could then come back and build things better. And in the case of Bitcoin, there's a couple things going on. The second wave of not necessarily cryptocurrencies, but crypto assets, where they're trying to build very sophisticated financial systems, but almost none of them are actually competing with Bitcoin. So there's a lot of alternatives. There's a lot of altcoins. There's a lot of great technology. And the number two thing I want families to understand is that with Bitcoin, it's in the category of digital hard money. Digital, we know what that means. Hard money, we know what that means, like the dollars you can hold. It means nobody, but when it comes to digital, it means that nobody can print more of it. It's very hard to increase the supply of it. It's basically impossible. Now we contrast that to the dollar, the US dollar, or any fiat currency. Well, it's very easy. They just push the print button at the Fed Reserve and more money's printed. And it used to be that you just send them to the printing press and now it's just a keystroke. It's automated over there at the Federal Reserve. So the dollar supply is expanding exponentially every year, particularly through COVID in the last year and a half with multiple stimulus and more stimulus likely to come in some form or fashion. So how's that going to work for inflation? Likely not very well. You see, with Bitcoin, I believe that it's won the digital hard money category. All the other so-called cryptocurrencies have lost. There's something going on out there. And there are some really interesting bleeding edge technologies and other crypto technologies, other tokens, protocols, but these are still very new. Those that I speak of are where Bitcoin was back in 2010 when I dismissed it, when many of you maybe have not even heard of it. That's the lay of the land, I would say, about thinking about all the other things, the other cryptos. And thinking back to 1999, a lot of you guys were in the stock market then. Think back to the tech bubble of 2000. During that time, there was Amazon.com, there was Pets.com. You pretty much couldn't tell the difference, but Pets.com declared bankruptcy. Amazon.com has grown enormously. It's an incredible story. But those two companies were right there side by side, similar market caps. And with Bitcoin, the other cryptocurrency market caps, even those right there in the top 10, many of them may end up being scams or poof, be gone. And so this is why I think it's so important for investors to educate themselves, because you've got to use your head. You've got to be careful here. Let's take another question here. Chris, many of us don't have any idea how to buy any cryptocurrency, or how to securely hold it. Can you just give us some basic advice around how to do that? So the question is, what's the safest way to do it? So there's two separate things here, okay? There's buying Bitcoin and there's storing Bitcoin. The way that you buy Bitcoin is you can go out, you have to open an account at maybe an exchange. You could open up, a Cash App, or there's a lot of different applications, Venmo and those type of things. And you think of it as an exchange. It's basically where you exchange US dollars out of your banks, your checking savings, for Bitcoin. And there's multiple regulated exchanges that are qualified custodians here in the United States. The big ones are Coinbase, Gemini, Cash App, Kraken. There's several others, and many of them out there are trust companies. And so now what's interesting is we're starting to see bank charters being granted in this space. Another one that came to mind was Kraken. That's another exchange. And you have these crypto specialist companies in this space now. And that's one way you can buy Bitcoin. But understand, once you buy Bitcoin, you're holding it on an exchange. Exchanges are made for trading. And so if you just leave your Bitcoin on an exchange, well, that can open you up to fraud. If an exchange were to collapse or close or go bankrupt, which we've seen that happen, that opens you up for personal mistakes that could end up meaning that you're losing your Bitcoin. And once it's gone, typically it's gone. There's no tech support when it's gone. So at the end of the day, I want to be clear, I don't specialize at Bitcoin trading. I want to be very clear. I told you guys, I bought my first Bitcoin back in 2016, and I've been buying ever since. And I'm a long-term holder. So the second step after you buy it is you want to find a good place to store it. Now, again, you can store it at the exchange, or think about it as a custodian. So that was a good question there. Another one was, what's the best way to hold cryptocurrency? And in my opinion, if you have a substantial stake in cryptocurrency, it may be best to hold it on what's called a hardware wallet. And you can store Bitcoin on your own. You can literally take your Bitcoin assets, Bitcoin in this case, and put it in your gun safe. You can put it in your safe deposit box. You can literally take it and put it on a thumb drive and put it on your mattress. And that Bitcoin, or your multiple Bitcoins, could be worth millions of dollars in the future. And if you lose it under your mattress, if you were to lose it in a house fire, God forbid, nobody can help you. It's pretty interesting to think about that. It's like a bearer asset. And if anybody remembers bearer bonds, that's whoever holds the asset, well, it belongs to them. There's no registration. There's no identity tied to it. So if you get your Bitcoin on a hardware wallet, like I use, you're taking your Bitcoin security into your own hands. And the hardware wallet can help you, but then your biggest risk is really yourself making a mistake. It's not a perfect solution for the whole Bitcoin position. But if you're storing a large amount of Bitcoin, or a very meaningful dollar amount, if you will, you likely don't want to leave it on the exchange. That's my opinion. Let's take another question here. And this is a simple question, but I think it's such a foundational question. And the question is, what is really the underlying value of Bitcoin? So understand that for any asset that doesn't produce cash flow, think about commodities, the value is always going to be determined by supply and demand. And this is where things get really interesting when you research money. All the major currencies of the world right now are fiat money, and they're all expanding in supply because there's an economic currency war that's happening. One country starts to print a lot of money, and if another country doesn't print a lot of money as well, and this currency's value goes down, you might think that it's an advantage. But no, it's actually not, because when the companies in the stronger currency economy try to export their goods to other countries, it becomes more expensive. In most countries in the world, they're much smaller than the US. And here where we live, if you drive in any direction a couple of hours, there's a border. International trade is really important for most countries in the world. So what happens? So as soon as the United States lead the world into inflationary monetary policy like we've seen over the last several years, that's now debasing the dollar. And any country that didn't follow suit and debase its currency by printing more is punishing their economy by making its exports unattractive. This currency war has turned into essentially a race to the bottom, where every country, every central bank in the world wants to print so much that the value of the currency goes down. Now, I say we're just used to this. We're conditioned to this because we've seen it for decades. We're used to this. But see, Bitcoin comes in and has a program that won't allow anybody to expand its supply beyond its set schedule. So one way to put a number on this is the inflation rate. The inflation rate of Bitcoin is currently around 2%. The 100-year average of inflation in our country is around 3.65%. With the dollar in the past couple of years through the pandemic, there's been about 40% monetary inflation because of the injection into the N2 money supply. And what's happened is we've all become used to this. We're used to this in our world where the currency, the money, is always going down in value. So you always have to be growing your wealth, your assets. That's why we invest, right? You have to get exposure to stocks because, bank rates up until this year were paying little to nothing. You have to get exposure to real estate. These assets have to go up just to really break even with inflation and then hopefully beyond. And then comes along Bitcoin. And its real case is to be a store of value where you can hold that number of Bitcoin and you can know there's never going to be more than 21 million Bitcoin. There's a set limit. And when you have that Bitcoin, it's like you're getting a slice of the big pie. The Bitcoin pie is never going to get bigger in its supply. The dollar pie, on the other hand, is constantly getting bigger. And it's making your slice, your US dollar, smaller. So it looks like Bitcoin is going up. That's what it's been doing. And some of this is going up in real value. Some of this is the dollar going down as people are moving out of it. If the dollar falls in the footsteps of all other fiat monies that have come out before it, then it's most likely going to end in failure at some point. The question is nobody knows, will it fail in the next year? Will it be 20 years from now? Nobody knows. But the most likely scenario is that this game will be something that most of us have never experienced. It's called hyperinflation. Hyperinflation, if you research it, is a spectacular economic event where the dollar at some point literally goes to zero. And during that event, the real dollar of the asset in the world changes hands massively. People lose fortunes and people will gain fortunes during these type of periods. I believe Bitcoin is essentially a little ticket to the game of hyperinflation. That if it happens, you're going to be on the receiving end of tens of trillions, if not hundreds of trillions of dollars of wealth transferring in global nature. And if we back up, just take a step back and think about the store of value for a second, people have been storing tens of trillions of dollars in artwork, not to hang on the wall, but to store in a vault. They've been storing tens of trillions of dollars in gold. Most of you, if you hold gold or silver, you may not be holding it to make jewelry or to put it in computer chips or iPhones. You're just sticking it in a vault. It's some portion of the $380 trillion real estate market globally. Some portion of that is wealthy people just buying an apartment or a condo in New York for a couple $1,000,000 in maybe another major city and just leaving it empty just to store the value outside of the banking system. And a lot of the value, tens of trillions of dollars, is currently in process of migrating and finding its way into Bitcoin as we speak. It's a huge acceleration in adoption. Major players in the financial industry that once called it a scam are now believing in it. They're investing in it themselves. Their institutions are investing in it. The SEC has approved spot Bitcoin ETFs. We've had 2 presidential candidates here in 2024 endorse it. In fact, say that if they win, they would put it on the government's balance sheet. So when you hold some Bitcoin, I believe it could be a ticket to receiving value as this migration occurs. So basically, where does the value of Bitcoin come from? It's simple. It's supply and demand. And this is one of the assets that you have access to that cannot have its supply increase beyond the cap. This doesn't happen in real estate. This doesn't happen in gold. There's always going to be new gold reserves being found. There's always new raw land to get developed into real estate. There's always stock splits. There's always new IPOs. It doesn't happen in any other place where we have this extreme form of scarcity. And so what happens is with the cap on the supply, anytime demand increases a little bit, the value of Bitcoin shoots up. And that's where the value of Bitcoin comes in. It's your store of value in it. There's demand for storing value in it today. And as that demand increases, that's what's causing Bitcoin's price to increase. So let's take another question. Do you think everybody should own Bitcoin? What's your thought on that? As a fiduciary advisor, REAP Financial, all of our team of advisors are fiduciaries. We're never going to say everybody should own anything. But I believe, and just as we're spending time here today as investors, you should look into Bitcoin. But there's a certain amount of education that we want you to have, because if you don't understand it, then you're going to have what we call in the Bitcoin community as weak hands. And this is where you're going to get some Bitcoin and then you're going to experience a little bit of volatility. And I mean, the volatility in this space still today is nothing like you've seen in your investing career. But good chance this volatility, it's going to mess with your brain. And it's going to be like the kind of thing that happens at the blackjack table or the craps table when you go on tilt, so to speak. And you could basically lose your money in a big way if you're not educated, because potentially you'll sell out of emotion. So I want you to be educated. And then all of a sudden, you put together a strategy where you're buying Bitcoin for the right reasons. And nobody on this planet should buy Bitcoin without learning to understand a little bit about it. And most people won't do that. They just want to get rich quick. They won't keep educating themselves until it just keeps getting more and more painful to watch as the price of Bitcoin goes higher and higher. And it's very high right now compared to the $16,000 price point it was just a year and a half ago. But it's not too late. That's a question that we also get quite a bit. Is it too late? See, the design of Bitcoin is literally designed to go to a price point of $1 million per coin. And all of the new economics that were invented by Bitcoin were designed for it to go to $1 million. Now, here's a little knowledge, because when we think $1 million investable, we think about it more in like stock terms. But every Bitcoin is actually 100 million shares or 100 million transactable units. The whole setup for Bitcoin is for the smallest transactable unit to become worth just 1 penny. And at that level, Bitcoin becomes worth $1 million. Now, nobody knows if that will happen, but what's crazy to think about is that we're already most of the way there from where it started. Now, a question I'm fielding a lot right now is, okay, well, if I want to get in the game, if I wanted to buy Bitcoin and it's at $60,000 today, do I actually need $60,000 to go out and buy a single Bitcoin? That's the cool thing about it. The answer is no, absolutely not. You can actually buy a smaller fraction of value in Bitcoin than you can in any other asset. Now, pragmatically, you can put as little as $5 in Bitcoin or $100 in Bitcoin. And it's actually the most accessible asset in the world because it's globally traded. It trades 24 hours a day. It never turns off. And the minimum investment is less than a penny, technically, when you think about the value of Bitcoin. Now, just a quick story to put a finer point on it. The first transaction of Bitcoin is where a person used Bitcoin to buy something in the real world. And this took place in 2010. Somebody bought pizza with Bitcoin. And I believe it was 2 pizzas for 10,000 Bitcoin. And this is when Bitcoin was in its infancy stage, just trading at pennies on the dollar. So that Bitcoin, fast forward, that was 2010, that story. Here we are, 2024. That same 10,000 in Bitcoin today would be worth $700 million today. That's a lot of pizza. We're talking about 14 years ago here. Let's say 2 pizzas cost what, $30? So what was once $30 is now 700 million. And when we look at this chart, this long-term chart is really important because yes, there's a lot of volatility, but does it look like it's going to zero anytime soon? When has it ever gone below? If you start to look at some really long-term support resistant type of things, something spectacular is really going on here. And the longer that we put off understanding it, the more opportunity we lose. A lot of my conversations are talking about the price of Bitcoin and then the pullbacks. And one thing that's really interesting with Bitcoin is there's an inflation rate that creates new Bitcoin. There's another layer to it. Every 4 years, the inflation rate is cut in half. It's called the halving. And when that gets cut in half, it marks the beginning of a new 4-year cycle in Bitcoin, in the Bitcoin economy. And in that 4-year cycle, it usually takes about 6 to 12 months after the supply shock before the next bull market in Bitcoin starts. And then that bull market in Bitcoin usually lasts for a couple years. From a Bitcoin 4-year cycle perspective, we are not near the point of the 4-year cycle that has historically been marked by a blow of the top bubble. That has to correct at some point. From my perspective as a wealth manager, the amazing story of Bitcoin is actually not even what we're talking about here. It's not looking at the price of Bitcoin. It's not looking at the chart. It's that more and more people I consult with are considering getting into the Bitcoin game. Think about it from this perspective. What happens when you add Bitcoin to your portfolio? Well, Bitcoin under a microscope, it's highly volatile. It can freak everybody out. But if you don't really understand what you're looking at, then you're going to get scared off by it. But when you start experimenting with this, things get very interesting because from a holistic portfolio perspective, in the mid to long-term approach, adding Bitcoin could actually bring the volatility of your overall portfolio down. And you may be saying, well, how is that possible with this ultra volatile asset? And it's because it's truly an uncorrelated asset. No matter what the Federal Reserve does, no matter what the government does, this technology, this software that's literally being run by tens of thousands of investors on every continent, every country, all around the world, it's a new technology that cannot be turned off. It's just like the internet. It's decentralized. And it's so interesting because it's borrowed the idea of the internet. And many of you may not know this. The internet was designed to make it so that if the military had communication failure, let's say the Pentagon was nuked, they would be able to communicate. And guess what? The internet has been up ever since it's been created. Bitcoin started in 2009. The Bitcoin network has never failed. It's been up ever since. And I think back in 2019, if you remember that the FBI servers went down from some hackers, the White House went down, the Treasury was hacked, Google was hacked. Well, throughout all of that, Bitcoin had a 100% uptime. It had 100% uptime for the whole time. So something very special is going on here. Now, through its history, there's been periods of price fluctuations, yes, but when you look at it from the long term, those were temporary. So I was just looking at a couple questions here, and I think we'll close. But one of the things that happens every year in Bitcoin is when people get excited about it, and then they get bearish about it. And I mean, this has been the nature of the beast since Bitcoin started. So whether it was 2012, 2016, 2017, 2021, or now here we are, 2024, Bitcoin again hitting all-time highs this year, I mean, it's going to likely happen again in 2028 and 2029. And all along the way, everybody thinks they've missed the boat. Everybody thinks they're late. And in my opinion, everybody that thinks that is wrong. Because if you're tuned into this, you're still early in the know. Now, maybe fast forward to 2030, you might not be that early anymore. But right now, as I deliver this wealth report to you, in my opinion, you're not late. Consider the major institutions out there. They have just started allocating to Bitcoin here in 2024. As I mentioned, the SEC has approved spot Bitcoin ETFs just at the top of this year. We have presidential candidates and world powers considering adding it to its balance sheets. You have major corporations that have been adding it to their balance sheets. A major corporation, publicly traded, MicroStrategy, has over $14 billion of Bitcoin on their balance sheet alone. Now, like my father told me growing up, my best memories, we'd go on camping and fishing trips. You know, he always told me, the early bird gets the worm. This may be true as well with Bitcoin. Only time will tell. If you have more questions around this space, never hesitate to reach out to your advisor. I appreciate you joining me on today's Wealth Report. Until we speak again, all the best to you and your family.